Hello, is Gilbert Ray here from Peeps Pirate, and this is another video on the V75, the strategy of V75. So the strategy works with every index, which I've tried, but like it works more with the V75. So works best with the V75. So I would suggest just using it in the V75. And okay, let me create things. This is the real account. As you can see, guys, here it's a real account. Let me move. It's a real account, guys. So now we're done with that, so let's go to the video. Mash it up. And show you the setup. I think I already did some on the chart. So this is how it looks in the this is how it looks on the everything after the setup and everything. So I'm just gonna clear things first, everything, and let's start with the moving average. With 21, I put any color of your choosing. I just choose the white one. So 21 exponential, done. And then you're going to the moving another one, and people started asking me why are we using the exponential or the simple one. Then I think you have to know the difference between the two. Okay, the simple, the exponential, and the smooth and linear way, that just the two ones. Okay, simple one, it just measures the average price of the market depending on the over a long time of price data. So that's the simple moving average. Exponential, it focuses more on the weight of the price right now on the current market, and we are dealing with volatility. So we have to go with the exponential because we are in the market right now. We just want to see what's happening right now. We don't need a lot of price data to know to know where the price is for us. So that's why we are going for the exponential. In simple terms, I would just say if you use the simple one, you will be lagging way more than the exponential. There's a bit of lag in every indicator, but like still the simple one is just a bit more lag. So the exponential right now is the best option you have. Okay, I think we're clear on the why of that. So the 200, and that's why we even need to use a lot more of these. So now we're good. 2150 and then the 200, and then we're going to the RSI. The RSI usually is an indicator which measures like the level in the market. It measures the level in the strength and weakness of the price in the market. So it's usually 30. If you set it to default, it's 30 70. 30 means it's oversold. That means it's good to buy. 70 means it's overbought, so means like it's good to sell. So it shows the market where the strength of the bears and the bulls is. But we don't want that. We are going to the neutral, the 50 level. Where above it, we know it's good for buyers. Below it is good for sellers. So that's why we're going for the neutral one. Then I think we're clear on the why of that. So you can just choose any color of your setting, but don't change anything. Just change the levels to 50, and that's it. Don't change anything else. And I think we'll be. Oh, sorry, I didn't add it. I didn't click done. What is it? I didn't click done. Okay, so now we're clear on that. We're back on the setup. You can just put this however you like, any colors, but this is how the strategy goes. So the first thing, you have to go with the trend. Obviously go with the trend with this strategy. So if it's an uptrend like this right now, so I'm going for buys, and that's the thing, you have to just go with the trend. And then the first confirmation you're gonna do is make sure it works well on the 5 minute and the 1 minute. Based on the 5 minute time frame, that's the best option. Don't go above the 5 minute. Don't do it. Don't be tempted to do it. Just follow the rules. So easy, guys. You just put everything else for okay. If you're looking for buys, it has to be 21 has to be above 50 and the 50 has to be above 200. So it has to be in the 21, 50 and the 200. It has to be in that order. That's the first thing. If it's in that order, then that's the first confirmation. We are going for buy. And then the second confirmation is that the RSI, it has to be above the 50 level. That means it favors more on their bulls. So if it's anything below 50, don't do it. Even if it touches 50, don't buy it. Just wait for the all the confluences to be in this order. So 2150, 200. The RSI is above 50 levels. That's the second thing. The third thing is the candlesticks here. So right now you can see here there's like a bear, it's a perfect moment like for me to make this video because the market is even acting. And now we like two things are on good with us. Like we agree on two things: 2150 and the 200, and then the RSI is above 50. So third thing is the candlestick pattern. You have to make sure you get like a really strong bullish candle for you to go in the market. Make sure you get a bullish candle like this right here, an engulfing bullish pattern here, candlestick pattern. You can see this could have been good if you just bought above this candle. If you bought above that candle, your stop loss is just below that candlestick. So that's what you wait for. So right now I won't go because this is not a bullish candle. Right now we just wait. I will just wait for a bullish candle to form, and then if it's a good candle, I will go in for a trade. People usually, I try also sometimes to go to the 1 minute, but you can see the 1 minute is way below in our chart. The price is in between the lines, so it doesn't agree. The price has to be above the 21, 50 and the 200. So just just stick to the 5 minute. I think stick to the 5 minute. So right now I wait for a bullish candle to close. If this candle closes, I'm going in for a buy, and I'm in the market. If this bullish candle closes bigger than this one, I'm in, and then I wait. The final thing for you to be profitable in this strategy is the risk reward ratio. It has to be a 1:2 strategy. It has to be a 1:2 risk reward ratio. So if I'm putting my $10, 20, $50, $5, $2, $1, whatever money I'm putting in, I have to get double and then to be out of the trade. So if I'm to put like my stop loss here, I have to make sure it's at least agree like the same amount which you're okay to lose, and then you have to get double that to be out. Sometimes it can go more. It can go more. Like it can go above the 2, but it's better if you just lock it at 2, lock profit at 2, like a 1:2, and then keep holding. But don't be tempted to just keep on even if it goes back down. If you get your mark, which is a 1:2 mark, get out of the trade, be done. That's the final and the most important step here. So don't go with 1:1. Don't do anything below that. More is better if you go 1:3, but make sure you lock your profit at 1:2. So that's it. And then for sales, you will go look at this. It will be vice versa of the first thing. It has to be 21, has to be below all the other ones. So it will be 250 and then 21. And then the second thing is the RSI. So right now the RSI, let's see if we are looking at this candlestick pattern right here. This would have been a really good entry. So let's see, the RSI was down below 50, so it's good. That's the second confirmation. And then let's look at the momentum candle here. I won't close it after this. I won't sell after just this candle. I will wait for, you have to know your candlestick pattern on entry, guys. I will do a video on some of the entries, or you can just go, they're everywhere online, just candlestick patterns. There's a 3 momentum candlestick pattern, like a 3 candles like they follow, like simultaneously follow each other. So these, I would have just waited for like 3 bearish candle to close right here and enter the trade. And right now my stop loss will be somewhere above this candle here, or the second one, but this one. But also my take profit has to be double that, so it will be somewhere down here, I think. Yeah, and could have gone well, the trade would have ended really well there. So I think if you went in here and closed even here, this is more than 1:2, guys. Like it's a good trade. It's a good trade. So make sure you do that. Like, look at this. This was good here, but it didn't follow any order after this. There was like 2150, and then no, you don't go in that, guys. It has to be 2150 and then 200, not 21 250 for sells. So just follow. It has to be in that order. It has to be in that order. It's tempting. This strategy works well. It's so tempting that you will want to go into trades a lot of times, but like just make sure these, like all the confluences here are on your side, and then you're good to go. Because as I told you here, I usually wait for an engulfing bullish candle for a buy. Look at this. This is just happening live right now. So if someone just saw like bought here right now, you are stopped out, done, you're out. That was like an unnecessary loss. That's what I'm telling you. You have to wait for the candlestick here, for a bullish candle to close, a really good candle, a big one, like a momentum candle. Then you can go in, and the RSI is down. So you can see. So everything here works, and just follow everything. Follow everything. I would have gone into this trade. That's why I was using a real account here, and but no, I'm not going to this anymore. It just doesn't work. So I always wait for the market to go to be on your side, and then you can go in. And you can try and test this on different indices. Works also on currency. I've tried it on currency multiple times. Forex currency, not the volatility index, also works perfectly. But on the volatility, it works well on the V75. I've tried some few, but works best on the V75. So I hope you have a good time working with this strategy, and I hope it works.